trades. Let's now just look at what's happening on the entire the market, right? The pre-open session, the GIFT Nifty, the Nifty will come up on your screen, 25 points lower, so it's not that bad. We'll see. It's just initial rates which are coming through. 3 minutes to go about for the pre-open session to come to a close. 25,060 is where we are at. I think, Surbhi, we have a real estate discussion in focus.
Well, yes, we are putting the spotlight on the realty sector now. A lot of stocks have been buzzing around in trade. And the numbers have been largely good. I mean, if you're looking at pre-sales for most of the companies, Vijay Agrawal, Managing Director and Head of Infrastructure and Real Estate at Equirus, is with us now. Vijay, great to have you on. So, I mean, it's been good going so far, right? Let me first start with the latest developments. I mean, this GST cut, if it indeed comes through, do you think it can have any marginal additional benefits for real estate players?
Yeah, definitely. See, GST cut will definitely reduce the cost to consumers. And if cost to consumers is reduced, then we had always seen the buying coming from the consumers. Like if you see a real interest rate cut has created a positive momentum from the investors buying. So same GST cut will also give the same impact for the sector.
Okay, all right. Hi, Vijay. Good to see you, Ben. What's the approach then in terms of, everyone's been talking about this 10-year cycle, 15-year cycle, in terms of real estate. Where do you think we are at? And going by the inventory levels with your channel checks, what do you think? How are things evolving?
Well, things are evolving in a better way. I think today the markets are driven by actual user demand. Majority of purchases are by actual user, which is very healthy for any market. See, in past, we had seen a break in the market where the investors came in, they were doing a lot of buying. Actual users were not there. Then resale came down, and which impacted the developer sales also. So now we have a healthy demand, which is coming from actual users. Secondly, families have money to buy the houses. We are seeing a 600 crores, 2 penthouses deal also in this market. And if you see the data from all the real estate company, mid-premium and upper mid-premium, these sales are very good. I think we are seeing a little bit slow on the sales which are coming on the lower end of the market. Like if you say a 4,000 rupees, 5,000 rupees, I think those are what we call as a budget segment. The sales velocity is not that great. So what it says that the Indians are preferring a better homes and they are not compromising on their living space, basically, because you are spending a lot of time in your home. And now people are cautious what quality of home I should have, where I should stay. Earlier, we used to buy a home in a 2-story, 4-story building which doesn't have a lift. But today, if your home is without, the building is without a lift, you will not able to sell. Now people are asking for amenities and everything, and nobody is questioning about price. That's a good thing. So means people are ready to pay a price for the amenities. And I think the developers have
wants top dollar amenities in their house. I get that. The question is really from an investment perspective. Do the stocks have more upside? The listed universe of real estate stocks, would you put in fresh money to work now?
Yeah, I think selectively we can always look for pockets where you can make money. So like I'll say our research, Pulte Patil, we had a research where we said there's a 20% upside on the stock. So there are pockets where you can always make money. See, why you will make money? See, ultimately, there has to be a growth in the sales, profitability of these companies and our free cash flows. I think we are seeing that those three things are panning out in most of the real estate stocks. And that's a good sign, healthy sign for the market.
So still more upsides perhaps and more money-making opportunities in real estate stocks. Got it. Thank you very much for joining us with that conversation today. Well, it's 9:10. Let's quickly take stock of